Welcome back. In the last class, we considered the fraud triangle and we used this to explain why people commit fraud. We talked about pressure or motivation, opportunity, and rationalization. In this class, we'll be looking at case studies of people, of fraudsters, or let me say organizations that were involved in fraud and the motivation. We will be using this to explain further the fraud triangle. Let us start with an international case. Mr. Thomas was the vice chairman of Walmart. This is a case study of an executive fraud. It's an employee fraud, and if you can remember, under the types of fraud, we made mention of a type of fraud which is a reimbursement fraud under the asset misappropriation, reimbursement fraud. If you can remember very well, we talked about reimbursement fraud, a situation whereby an employee can request for fraudulent reimbursement. Maybe you were sent for a training abroad and use your money. When you come back, proceed to the account with the receipts of your expenses and you'll be rightfully reimbursed. So in the case of Mr. Thomas, as big as he was, the second man in command in the company as big as Walmart, he was engaging in reimbursement fraud. What was his motivation or the pressure? In the case of Mr. Thomas, there was no pressure. I would like to emphasize that there was no pressure because the things he even needed money for, he needed money to buy fishing boots, to buy things for his vacation and all that. And this, he just thought that, okay, if I can get the company to pay for this, why do I need to pay with my own money? So he decided to forge receipts, to forge fraudulent reimbursement evidences and documents in order to be able to buy the expensive items that he wasn't wishing to buy with his own money. So at the end of the day, what did Mr. Thomas do? He was able to con over years the Walmart to sum that was up to $500,000. As an auditor, when you're thinking about reimbursement fraud, you might not be thinking that somebody in the category of Mr. Thomas will ever be involved. So as an auditor or as a fraud examiner, it is always very, very good not to underplay the extent that people can go. Then the amount, it could be as big as and it could be as small as that could be involved when people want to engage in fraud. Let me give you the profile of Mr. Thomas. Mr. Thomas' salary, as at the time he was with Walmart as the vice chairman, was more than 6 million naira, both in salary and in bonuses per annum. This means for him to have engaged in a fraud of how much? $500,000 over a period of 5 years or more, he was willing to sacrifice his $6 million, paycheck per annum for about 150,000 naira fraud, $150,000 fraud per annum. You can see how dumb that is. But when we think about a motivated fraudster, a fraudster that just think I can get away with this thing, his ideology is why should I need to pay with my home money for these items, my golf boots and all that. If the company should pay, I work hard for them and the executive, I have access to these things. Those are the ideology as we made mention under the motivation theory MICE. So what are we saying? As a fraud examiner or an auditor that is trying to detect symptoms for a fraud, don't underplay the extent to which people can go. Mr. Thomas was caught with using fake documentation and fake invoices to put on the company the expenses that are not reimbursable. These personal expenses that we made mention of were not reimbursable. You can see how the legs of the three legs of fraud triangle aligns with Mr. Thomas. He was motivated with an ideology that I can get away with this thing. I'm in capacity, I'm in a management position, and I shouldn't be paying for this item myself. The company should pay. That is the motivation. That's why I said it wasn't really pressured. There wasn't really a passive pressure, as we can see in this case. Then the second aspect is opportunity. You saw the opportunity that, okay, if I use fake invoices, I can even bully the account people because of my status into just allowing anything to go. In a place like Nigeria, where the corporate governance is very low, we even see MDs and big people in organization first enforcing their own personal travel tickets, international travel tickets on the account for payment. They don't even mind. They don't even fake invoices like I've traveled, just reimburse me. And yes, men in accounting department in a place like Nigeria that they think their jobs depend on the approvers and being in good books of the executives and the top management, they believe it's their responsibility to just down to the tune of the executives, no matter what, because there are no controls, there are no independent internal control. Even our external auditors are not independent. That's why we have massive fraud in Nigeria. So when people say anti-corruption, you should know where it comes from, that everybody in the system is one way or the other involved. So that is the case of Mr. Thomas. So what happened to Mr. Thomas? He was caught, and his reputation went down when he lost his job and all that. So what are the lessons to learn when conducting forensic examination or even fraud examination? Try to understand fraud. Don't consider anyone too big for fraud. Fraud is fraud. There is no, when a man is a fraudster, There's no Mr. Big for fraud. In financial crimes. Then, when examining the facts and circumstances and evidence of a fraud, always keep an open mind. Don't think, it's too big for this. Don't think, no, you can't be engaged in this. Why will you want to sacrifice $6 million per annum for $150,000, $6 million, per annum for $150,000 per annum fraud? It doesn't really align. It's too big for this. Follow evidence and document the evidence. Do not make assumptions. That is, follow the evidence. Don't just make assumptions. Don't just think, oh, these are too small to look into. There is always a reason to look into something. Then, and don't say this is immaterial. It's material because when we talk about reimbursable expenses, we are not talking about the materiality in the sense of the organization Walmart now. Even $500,000 is material. We are talking about the materiality in the sense of who is committing it. $500,000 is material when we talk about reimbursable expenses. Maybe the whole bill of their reimbursable expense for a whole year across the management staff is $5 million now. $500,000 over a period of is a good percentage of that. Use the evidence to determine who, what, when, where, how. These are what evidences are for. If you see, maybe the auditors that got this just saw that what happened, these reimbursable expenses, there is a sharp increase over the last few years. What happened? These reimbursable expenses of Mr. Thomas has been having this huge, and it's not like he's been traveling on official assignment. So where is this coming from? And he looked into it and it got him red-handed. The second case we'll be looking at is the case of a Nigeria bank. I won't mention the name of the bank or whatever, but there is a case of this bank years ago, not too long ago anyway, where you just saw that they were having branches everywhere. Every nook and cranny of the country. Once you go there, you see the bank. Later, it was found out that the branches that were emanating without any justification all around the cities, the big cities in the country, were not actually expansion driven. The reasons behind it are not really, the core reasons are not really expansion, so to say. It was a management fraud. It was a collusion fraud of people in top management. What were they doing? They would buy in the name of the bank, because it's the bank asset, an asset in eyebrow areas that is worth, maybe for instance now, 150 million naira, and in the books they put 500 million naira. They collude with the estates, the sellers, the real estate dealers to siphon the margin, their huge margin on their fraudulent business. So what happened? There were so many assets, unnecessary assets of the bank. This is a typical example of misappropriation of company's assets. They were misappropriating the cash, the fund of the company. Instead of using maybe the same 500 million naira could have established 5 banks, 5 branches across the same city, but they use it for just one and siphon 350 million naira at the expense of the bank, at the expense of the investors, at the expense of even the customer, because they were putting the customer's fund at risk. That's why some of these banks end up going down. In most cases, when you see it, these branches were not even justified. The establishment of these branches close to each other were not even justified, but because there was intention, there was reason behind it and all that, they let it pass. That is what? That is they were misusing policy-wise the asset of the company, and they were still misusing the cash in the real sense of it. Mind you, they will still equip the branches. It's not just about the building alone. There will be staffs and all that. So they were just piling up overhead. Apart from the initial fraud, they were just piling up overhead for the unnecessary overhead. And at the end of the day, you will see so many of these branches were in losses for years, because the asset that was even worth 450 million naira in the first instance, when you put it at 500, are you aware that is each one of these branches that they have independent balance sheets of their home? They make their home loss and their home profit accountable, and is the overall financial control department of the bank that now aligns it together to form the whole bank-wide balance sheet. So if your branch, if an asset that is worth 150 million has been recorded in your books already as 500 million, when will you, because they will amortize this, they will split the cost of the branch they are giving you as they will split the cost. They will amortize it over a period of time, maybe 10 years. Now you are paying, let's divide it by 10, 50 million naira. Instead of paying what? Instead of paying 15 million naira, you are paying 50 million naira as cost of amortization of the branch. The branch as a whole, as an entity, now let me say that, is now paying 50 million as against 15 million. When will the branch make profit? So we see these branches not making profit, struggling, and sometimes they end up closing them up because of what? The effect of the startup fraud. So these are cases that you can see now. What is the motivation? Or the motivation, the people involved, the management, the top management people involved, they were motivated to cash out, to get as much as they want. The desire for money, the quantum desire for money under mice is their motivation. And what is the opportunity? They saw the opportunity in the weak corporate governance in Nigeria. The weak corporate governance. There's really no, like I would have believed that even the Apex Bank should have regulated more and all that. I'm not casting aspersion or blame. But then when you see these branches just cropping up, there should be a strict regulation, because now we are talking about the investors' money. Like, what's the justification for having this number? What is the justification for this? Then even the asset procurement should be vetted. Maybe there should be an independent bureau of private procurement. We have Bureau of Public Procurement. I'm just suggesting that we look at procurement issues even in the private sector, because you are trying to secure the interest of the investor. And once the investors lose confidence in the investment system, maybe foreign investors invested in that and it went down the drain, how would they ever have the confidence of now investing in our economy again? So I think these are things that should be looked into even by the government to support the private system, although they still have their own issue even in the public sector, but private sector should be carried along too. There are so many things going on that needs to be rectified. Let's go to the public sector. We've seen another case study, one international case study, one private sector local case study. Then let's look at the recent issue of NDDC. we target years of fraud and malpractices. It's not today's matter. It's not the present management alone. It's been in fact, what brought the present management is what? The interim management is what? Is to look into, to institute a what? A fraud examination and forensic examination of the activities of the NDCC over years. But what do we have? We have even the people that were meant to, we have allegations against them as well. So it's still, I won't say much about it. I would have put all videos and all that of the hearings and all that, but because it's still under hearing, it's still under this, so that we don't abuse content, we'll be leaving it at that. That's to the extent that it was alleged that they've not been paying, there were contracts that were given out that were never executed. They were looking for the contracts all around and all that. So a whole lot because of what? Systemic problem. What are the motivations of these people? With greed, which is desire, quantum desire to have money, quantum desire. Whoever is found culpable, if it was the former management or the present one, there's nothing that we can trace this to that will be too far from greed. And greed that you will even evaluate and you begin to see that what is happening. Are these people really, what is happening with them? So greed is the motivation, and the opportunity is the fact that there is no control at all. The MD of a typical Nigeria organization can just call and say, wire this amount to my money. There's really no strict control. You've never had, we will still look into the case of whistleblowing. We've never had an internal auditor in an organization blowing the whistle, and they are sweeping fraud and crimes and misappropriations under your feet every day. That means you must have aligned with them. Your office has been compromised as an internal auditor. Even external auditor, like I said in the previous class, the effect of our external auditors in Nigeria has been underplayed because of influencing them negatively, and they themselves allowing themselves to be influenced. So that is about the issue of a case study of NDDC, the bank fraud in Nigeria, and the international employee fraud of Mr. Thomas, a former vice president or vice chairman in Walmart. So what have we been able to achieve in this class? We've been able to see case study of different people, in most cases employee fraud, and we've seen the fact that the three legs must always align. The three legs of fraud, the three fundamental fraud triangle legs, the tripod must align before a fraud can be executed and perfected. And this is telling us that as fraud examiners, even starting from the audit, which is saddled with one of the responsibilities of auditor is to see if there's any symptom suggestive of fraud, and now blow that out, escalate that so that it can be taken on and it can result into fraud examination, which can later involve law that will bring about forensic accounting. So what are we saying? We are saying that fraud has three legs. The fraud, before people can commit fraud, there must be three aligning legs, which is opportunity or motivation, then the issue of pressure or motivation, and opportunity, then lastly rationalization, which is justification of the bad acts.